Good morning and welcome to our Ashworth Wealth weekly market update. My name is Scott Thomas, and we obviously this last week just went through Thanksgiving and had a little bit of time to sit back and kind of reflect and spend a little bit of time away from the office. And I had a couple things I wanted to share with you. We've also just gone through our fall client meeting, our kind of our busy season, and we've just had a chance to really sit down and talk with clients about where they're at, where the markets are at, and I think that we have a lot to be grateful for. This year has been a tumultuous year. We've had a lot of ups and downs, but I would say that we've had a lot more ups than we've had downs. I was thinking over the weekend, I would imagine if you went back to January 1 of this year and took a survey of all the economists across the country and asked them, where do you think we're going to be by the end of the year? I would guess the vast majority would have said we're going to be down and we're going to be in some type of a recession. And yes, we've had a tumultuous year. We've had high interest rates. We've had two wars going on, high oil prices. You could go on and on and on. There's been a lot of headwinds in the market. But looking back, I think we're in much better shape than what most people would have predicted going into the year. So I'm grateful for that. There are a couple things I wanted to share with you, though. I'm going to share a chart with you. This is basically the S&P 500, but it's broken up into three different charts. The S&P 500, if you look at the middle line there, the S&P 500 has actually done quite well for this year. And we've had a number of clients ask us, why don't you just have me in the S&P 500? Or even better, why didn't you just pull me out and put me into the top 7 stocks? Because look at how they've done. I just wanted to talk a little bit about this. So the top line represents, if you were to take the top 7 performing stocks out of the S&P 500, those 7 stocks are up 72.5%. What a phenomenal year for those 7 companies. Tesla, Amazon, Microsoft, Apple, Nvidia, Alphabet, and Meta. And I'm going to go through and talk about this is how those companies have done, each of those companies in 2023. Tesla's up 35, Amazon up 35, Microsoft up 30, Apple up 32, Nvidia is the big winner this year at up 99.9, Alphabet up 35.45, and Meta at up 98.45. So those companies have been phenomenal. So if you take all of the S&P 500, it's up 18.2. If you take just those 7, it's up 72.5. However, what's very interesting to me and what gives us a lot of optimism going forward, and I'll explain that in a minute, is the blue line at the bottom where the other 493 companies in the S&P 500 are only up 3.5. So the vast majority of the growth and the success of the S&P 500 index this year is off of those 7 companies. However, and this is what I wanted to kind of talk about today, most people don't invest on a one-year basis. Most people are in this long term, and we certainly encourage that and encourage being diversified. I want to look at those same companies and look at how those same companies did in 2022, just for a little bit of perspective, and then talk about how they've done over the last 2 years. So Tesla last year was down 65%, Amazon down 49. Excuse me, this is in 2022, not 2023. Tesla down 65, Amazon down 49, Microsoft down 28, Apple down 26, Nvidia down 50, Alphabet down 39, and Meta down 64%. So yes, these companies have done extremely well in 2023, but if you were to go back and take a 2-year average of those 7 companies over the 22 and 23, Tesla is still down about 30. Amazon's down about 40, 32. Microsoft's down 8. Apple is down 4%. Nvidia is back to even. Alphabet is down 19, and Meta is down about 29%. So yes, this is encouraging to look at these 7 stocks, but when you take that into account and how they've done over the last 2 years, all of a sudden those 7 don't look so wonderful. That's why we don't chase returns. We don't try and chase the hot stock, but we really try and preach to our clients to be diversified and be in the markets long term. So one thing that I wanted to kind of share with you is the bottom 493 companies. We have great reason for optimism. We look ahead, and certainly there are a lot of things that we don't know. What's going to happen in Israel with the war? What's going to happen in Ukraine? There's a lot of uncertainty out there still, but what we do know is that it looks like if interest rates continue to be maintained the way they are, there will most likely be some interest rate drops coming up over the next 6 to 8 months. That would be take some of the headwinds away from the market. And when you've got 493 companies in the S&P 500 that are basically flat or only up a little bit, we see that there's a lot of room for growth on a lot of those other companies. So what we tell clients is, let's stay the course. Let's continue to be diversified. Let's continue as we look to 2024, as we're watching interest rates, as we're watching what the Fed does, as we're watching what earnings come back at. We still have reason to be optimistic going into 2024, and we feel like 2024, with a few things going right, could be a good year and hopefully not bring quite as much turbulence as we've had in 2023. Anyway, if you have any questions, if there's anything that we can answer for you, if there's any information we can get for you, well, we love to do it. And again, if you have any questions, please give us a call. Thank you. Appreciate it.